Welcome to this week's edition of the Satori Traders Precious Metals News. We have been busy this past week updating the website. We've got a new menu structure throughout, and we have updated the three main precious metals pages. I had never looked at platinum before as an investment vehicle, and so this is the first time that I've done that. It's a good piece of content, go look at it. And then these pages also got updated. So in the process of looking at platinum, this is the monthly time frame, and so we can see clearly we had a downtrend for several years. That was the financial crisis in 2008, and now in 2020, obviously platinum has broken higher. This breakout actually occurred in November of 2020, which the silver and gold were also heading higher at that point. Silver and gold had a series of price slapdowns, which are not uncommon in silver and gold. Clearly, platinum didn't get the same treatment, so platinum was allowed to run. And obviously, based on this monthly chart, we have MACD in bull mode with both indicators above the zero level, buy signal, energy is elevated, platinum wants to run higher. Then I was looking at the platinum versus gold ratio, and I noticed this channel. So to my eye, it appears that the ratio between the prices of platinum and gold is traveling in this channel. I suspect the reason that the ratio overall is rising is because both metals are rising in price together, and so we get an uptrend. Now what's interesting is that uptrend started back here in 2008, and so something shifted in the precious metals markets back in 2008, and I think that that's one of the things we're seeing in this ratio chart as the ratio trends upwards. Now if we focus on this channel, it appears to be marking levels of platinum being cheap relative to gold and gold being cheap relative to platinum. And so currently we can see we're at a point where gold is cheap relative to platinum. And so that was an interesting observation as I looked at platinum. And then one of the things I did on the website is compiled a table. How did the three metals perform in 2020? And so you can see it here. There it is. You know, silver hands down was the winner in 2020. Gold did well, and then there's platinum. I don't have a crystal ball, folks, but I would expect that this outperformance will continue. Platinum is clearly a valid investment vehicle, but it does not serve the same role that gold and silver do. Gold and silver have been money, store of value, however you want to look at it, thousands of years. And that's not true. We can't say that about platinum. And so I suspect that going forward, this outperformance will continue. Let's jump right into the charts. Also on the precious metals page, I looked at, this is the silver versus gold. Obviously, silver was extremely cheap relative to gold just recently. This is back in 2019. The ratio has reverted back to, this is the 200 period moving average. But notice that the ratio overshoots. It doesn't just hit the mean and stop. You can see it, you know, overshoot, overshoot, overshoot. And the expectation is that now we're going to see an overshoot down towards the low extreme where gold becomes cheap relative to silver. That's also in the update on the website. Here we are in the current gold chart, and we can see last week, so we did get the breakout above the pink, the upper boundary of our correction channel, and price worked its way a little bit higher. There's a fair amount of resistance on this breakout. Obviously, we've got resistance along the median line of that Andrews pitchfork. Price is pulling back now. We're getting a healthy correction. We're testing the breakout level, the upper boundary of the channel. And so that's what we got on Friday, was that test. And we've got the 20-day acting as support. We've got our horizontal support resistance next level, that's 1770. So MACD in bull mode, energy is elevated. No reason to think that this rally isn't going to continue. Obviously, this fork is in play, and so we've got resistance along the median line, and then we're going to have to deal with this 1810 to 1820 range. There's support and resistance in there. In silver, so silver's dealing with the round number at 26. The 50-day moving average, the upper median line of this Andrews pitchfork, and then this is the sliding parallel to this pitchfork. And so silver's got a lot of conflicting support and resistance in there. And as I've pointed out in the past, these confluences of support and resistance tend to act as price magnets, as we see here, where price is kind of drawn into this confluence of support and resistance. But anyway, silver's looking fine. We've got MACD headed in almost into bull mode last week. Energy clearly elevated. Let's look at the mining stocks. This is GDXJ in the weekly time frame. Our premise continues to hold water, so we can see downtrend, sideways shuffle. Our premise, our assumption is that we're now back into bull mode or an uptrend. And so that continued last week. We got some softness, but just a test of support. And based on this candlestick, we can see buyers came in at this support level and pushed price back up. And so we're expecting this level to be support, and that's what we saw last week, is that it did provide support. We've got energy rising, and so we clearly see energy starting to rise. If we zoom in on MACD, we can see that we did get a buy signal last week in MACD. And again, this is the weekly time frame. If we look at the last MACD buy signal, so here it is, this is April of 20. And so there was our MACD buy signal back in April. Let's pull back and look, what did price do afterwards? So there's the buy signal, and then, price gained whatever percentage that is, 40, we call it 44 up to 66. What's that? 22, is that 50%? So 50% gain after the MACD signal. So your mileage may vary. Here's GDXJ in the daily time frame. Same ideas that we saw with gold. We've got a confluence of support and resistance. Prices pulled back into support so far as acting as support. We've got the 20-day moving average. We've got this horizontal support resistance zone. MACD is in bull mode. Energy elevated, mining stocks are looking good. Notice also that the 200-day moving average is generally pointing upwards. Obviously, it's sideways here, but the trend is shifting. I believe the trend is shifting back into the upward direction. Silver stocks looking fine, bumping along the 200-day moving average for most of last week. Got the 20-day acting as support. Clearly, the median line of this Andrews pitchfork is acting as resistance, but the silver mining stocks looking just fine. MACD in bull mode, energy elevated. The dollar kind of pooped the bed last week. Were we just getting a pullback in an uptrend, or was the uptrend rolling back over? And it certainly appears this week that the uptrend is rolling back over. The dollar was unable to proceed higher. So MACD never made it into bull mode. Now we're getting indications that it's rolling over, energy dropping. If we look in the daily time frame, we can see that last week we talked about this 91.35 as being a potential support level. We can see right there that it acted as support for several trading sessions. Notice how price just sliced right through that level like it didn't exist. No support at all in this daily time frame at that level. After dropping through, now we've got price, or the dollar, testing that level from below, and clearly it is providing resistance. So support has become resistance, and that's exactly what we expect to happen in a downtrend. So indication that the dollar is now in a downtrend. On Friday, we got another bearish candle that pushed us further into this support and resistance zone. There's a lot of price action in this zone gets confusing, and so just expect that the action in this area may be confusing. MACD has moved back into bear mode in the daily time frame, both indicators now below the zero level. Obviously, nobody's interested. Based on stochastics, nobody interested in the dollar right now. Interest rates have pulled back. But notice after this big impulsive move, this is the weekly time frame, this is a dramatic move in interest rates. It's not surprising to see a pullback, and we should pay attention to the fact that so far this is a very gentle or mild, a small pullback relative to this size move. It wouldn't be surprising to see a pullback all the way to the 38% Fibonacci retracement, but that may not happen. The trend, the upward trend in interest rates may be strong enough that a 23% retracement is all we get. And I'll just point out that is a very impulsive move higher. There is a lot of energy trying to push interest rates higher right now. In the daily time frame, we can see that in the last week, price or the yield on the 10-year note has dropped below what was acting as support. So we got support here, no support, and now acting as resistance. 20-day moving average obviously acting as resistance as well. Some hints that MACD is about to turn back up. No energy. Let's look at the equities. SPX, obviously, when we looked at it last Sunday, had bumped in. That's 4186 or something like that. Almost the 4200 round number. We got a pullback and then spent the week dealing with this resistance along the top of this multi-month channel. And so clearly strong resistance at the top of that channel. And then obviously we're getting support at the upper median line of this shift pitchfork. MACD clearly in bull mode, super overbought. And on the point of being overbought, I had to rearrange this chart to find the 200-day moving average. That's how overbought these equity markets are. There's the 200-day moving average. There's the 50, there's the 20, and there's price. Just crazy level of overboughtness in these equity markets. I would not want my retirement hinging on this level of overboughtness being sustained for any period of time. This is not healthy action in any market. Dow, obviously the 34.3 level acting as strong resistance. This Andrews pitchfork providing support. Prices dealing with it. Support, resistance. We'll see what it does in the next week. Nasdaq bumped into resistance, pulled back, bumping sideways most of the week. Still in bull mode. No reason to expect lower prices, although nothing particularly bullish in this chart. Brent bumped sideways most of the week. Obviously the 20 and 50-day moving averages providing support. Got resistance at this horizontal level, $70 round number if price gets back up there. It appears that Brent oil is in an uptrend here. 200-day clearly turning up, 50's up. All of the moving averages, bullish alignment. Price would appear to be heading higher there. Folks, that is all I have this week. That was a pretty quick run through the charts. Have a fantastic week going forward. I'm going to continue with updates on the website. Again, check it out. We've got new menu structure, new format, new menu structure, updated content. Go give it a look, and I will talk to you soon.